Nigeria's inflation has continued to spike with no possibility of beating a retreat anytime soon. The country recorded a 16.47% increase in the month of January from 15.75% recorded in the previous month, making it the highest increase in 3 years. The food index rose sharply to a record high to stand at 20.57% in January 2021, compared to 19.56% recorded in the previous month. That's representing a total of 9.56% recorded in the previous month, the highest since July 2008, when it stood at 20.9%. Surprisingly, Kogi State led the list of states with the highest inflation rate in January 2021 with 21.38%. It's closely followed by Oyo State with 20.17%, Bauchi State 19.52%, Ebonyi State 18.74%, and Benue State 18.33%. The rise in consumer price index indicates that consumers spent more in the month of January compared to December, despite the high spending that December is naturally known for. Now, while the inflation continues to rise, let's discuss the impact on an average Nigerian whose pocket is, of course, overstretched. Well, I have the right person to discuss this. He's the Chief Executive Officer of Cowry Assets Management Limited, Mr. Johnson Chukwu. Thank you very much for your time, Mr. Chukwu. It's always a pleasure to have you on the show. Good afternoon, Mr. Chukwu.
Thank you, Tony, for having me. Good afternoon.
Yes.
Good afternoon.
Yes, as usual, let's kick off this way. What's your overview? What were you expecting? 16.47%. 0.71% on the high side. What were you projecting? Some said 16.5. Some. What was your projection? Was it just normal for it to come this way?
Yes, we had expected that the inflation rate would cross 16% in January. Of course, you know some of these factors that are driving up inflation. Irrespective of the fact that the borders have been opened, we know the lag effect of the border opening. We still not address the shortages in food and food items, which is actually driving up the inflation rate. If you disaggregate the inflation rate, which you had done earlier in your presentation, you observe that the food inflation has moved to 20.57% from 19.56%. And it's basically the food inflation that is driving up inflation, because core inflation is just 11.8%. An increase from about 11.37%. So if you take out the pressures we're having on food, the inflation lower all over the country. We have people who cannot go to the farms to produce. If you look back at the history of food inflation, the period we have the highest food inflation in recent past was September 2017, and food inflation was about 20.32%, and was basically because it was a period when we had a lot of flooding that displaced and destroyed farm produce at the farm gate. So we couldn't produce or evacuate those farm produce because they were destroyed by flooding in 2017. And today, we've seen that the inflation rate, food inflation, is above that period when food items were destroyed by flooding, which is principally because farmers have been displaced.
Mr. Chukwu, you've identified the issues of displacement of farmers. That's talking about the herders and pastoralist conflicts. But this is also meeting rising crude oil price and the higher landing cost of PMS. How do we put this side by side?
Well, the higher landing cost of PMS, if you look at the core inflation, which is why I had to disaggregate. If you look at the core inflation, you take out the food inflation. So you're looking at the non-volatile food items, consumer items like fuel. Just this month, we are seeing that sharp increase in fuel. Well, if you look at December and January, fuel price actually came down because the Minister of Labour compelled the NNPC, or we call it PPMC, to drop the fuel price by 5 naira. So we saw a price drop from 167 to 152. And but interestingly, we are seeing that pressure come back because we know that some filling stations are already selling for like 170 naira per litre. And it's expected that the fuel price will further increase. So that will bring additional pressure on the consumer price index. which will imply that in subsequent months, we should even expect that consumer price index or inflation will go beyond the current 16.47%.
For states, Kogi State, 21.38%, Oyo State, 20.17%, Bauchi State, 19.52%, Ebonyi, 18.74%, and closely followed by Benue at 18.33%. What could be responsible for these figures, particularly with regards to Kogi, that seems to be somewhere around the center?
Well, there are a couple of factors that are determining but if the farmers have been displaced and they have to get their food from other neighboring states, the cost of transportation and the risk of insecurity in those states will entail that those traders who are bringing those food items are adding their risk premium. So you find out that displacement of farmers within farming states or food belts will lead to high increase in their inflation rate, because people have to now go and get the food items from other neighboring states. That, for me, is one of the critical factors that drove inflation in places like Kogi State and those states that have the highest rate of inflation. Because if you look at a place like Abuja or Lagos, what happens at places like Abuja or Lagos are aggregators for food items. So people produce food in the other parts of the country and they head to those major cities like Lagos and Abuja that are still relatively oases of safety in the country.
Mr. Johnson, I want to follow up with this question. This brings me to the issue of deregulation and the kind of deregulation we're operating at this moment. You talked about the PPMC being ordered to reduce a particular price. You know, the NNPC still wants to peg pricing one way or the other, or the federal government, one way or the other, still want to peg pricing. When are we going to get to that point where we will allow market forces to thrive when we have to talk about petroleum products? We can't continue to sustain this.
I believe we are getting to that point. I mean, previously the government did not believe in adjusting fuel prices because they felt that it was to the benefit of the very poor in the society. But as it stands today, the government, the NNPC or PPMC have just allowed fuel prices to be adjusted a couple of times last year. The reverse was only the case that occurred in December when the Minister of Labour, in the course of negotiation with Labour leaders, compelled NNPC to reduce the price by 5 naira. But as it stands, and we've heard the Minister of State for Petroleum announce repeatedly that Nigeria should give the alliance and prepare to take some of the pains of the increase in crude price, which means the government is either going to allow for price modulation or the appropriate thing is to allow for deregulate the downstream sector, so that we will not just take the pain of price movement, we'll also take the benefit of a deregulated market.
On the other side, do you see marketers also getting into business, you know, when they open up this market so that it can be totally opened up? And what do you think should also be done? Let's talk about Nigerians now. Who will feel the impact? All of us who will feel this impact. What are the quick wins for government to be able to make us understand that we can actually trust her as a government?
Well, I think the first thing is that the government arresting the deteriorating security situation in the country. If we do that, we're going to see a moderation in food prices and obviously see a moderation in inflation. Because if you look at in 2016, when the economy went into recession, we saw an increase in inflation, which peaked at 18.72% in January 2017. Subsequently, inflation rates started going down, trending downward, because we saw an increase in productivity. What will drive that inflation will be an increase in productivity. So when we have an increase in productivity, which will largely be driven, from my perspective, the low-hanging fruit is the issue of food production and food prices. Once we address that, we would see one economic recovery, and improvement in productivity, remember, will also create employment and lead to the improvement in living standard of Nigerians. So that, for me, is the lowest hanging fruit. Address the issue of insecurity. If you do that, you're going to address a lot of other factors that are related to it.
Back to the issue of purchasing power. Let's stay with that. Another thing that we've argued about and has always been on the news is the issue of cost-reflective tariff for electricity. And this has also generated reactions. Which should come first, steady power or a hiking tariff? And we've seen even serious interventions now from the central bank trying to help the power sector stabilize. What do you make of all of these issues and how it impacts on the Nigerians?
Yeah, interestingly, we've not seen a material improvement in power generation or power distribution in the country. And what we have witnessed that the power sector reform has failed to achieve commercial viability, and we need to do something to rejig it. The first thing is that you mentioned the issue of cost-reflective tariffs, situations where the discos are not able to recover the cost of kilowatts of power that they sell to the consumers, makes it impossible for them to go to the market and access long-term funding that they require to strengthen their distribution grid. So what you see is that we're now in a cycle where improvement cannot happen because they are not collecting enough money. Because they are not collecting enough money, they can't generate enough resources to improve their distribution. So they cannot even distribute and supply improved power to the consumers. So we need to get and break that cycle. And to break that cycle, is either we come from allowing them to charge appropriately for the cost of power that they're supplying, so that they will become commercially viable for lending purposes, to access capital, to get the transformers they need, get the metering they need to have all the homes or the consumers metered, improve their distribution grid. And once we do that, they will be able to pay enough to the power to the generation companies, who will now be able to pay to the gas supply companies, so that you could have investment in transmission, investment in generation, investment in gas processing and supply, and then we'll have an improvement in our power generation. If we don't take those spends, we're going to continue to run in cycles of low power supply and low tariff.
Okay, let me quickly take you to what we should expect from the Central Bank Monetary Policy Committee with this new development, because it seems that they seem to be caught in a hard point at the moment. Now, what do you think would happen? Would this influence the decision of the next MPC meeting, considering the 16.47 figure that we have from the NBS?
I think the central bank has already made it clear that at this point in time, they want to prioritize economic recovery, even if it has to come at the expense of higher inflation rates. And whatever they do, the inflation we are witnessing is structural. I did mention that it's largely driven by food inflation. And I have talked about that food inflation was 20.57 in January, while as core inflation was only 11.85%. So you can see the diametric difference between core inflation and food inflation. Even if the central bank wants to praise the break, it will not necessarily lead to any change in deflationary pressure, because it's not driven by excess liquidity. What the central bank would have done is to put a curb on liquidity if the current inflation is driven by excess liquidity. But that's not the case. It's driven by supply shocks, because the current supply level of food items is far below the demand. We've seen the price of rice go to 30,000 naira per bag from just about 18,000 naira or thereabout. So this is not going to affect, it cannot be reversed by central bank increasing the MPR or increasing the liquidity ratio to curtail the system liquidity.
I've been saying it for some time. This is not really the best time to be a central bank governor in Nigeria. The challenge is kind of too much on the plate to grapple with. Now, let's look at how this also affects the trading pattern of the Naira. Mr. Chukwu, what do you make of those figures and how it affects what's been playing out in the Forex market?
The Forex market is driven by also supply and demand. As it stands today, we are witnessing an improved supply, or we should witness improved supply, because crude price has gone as high as $63 per barrel. So that will enhance the capacity of the central bank to intervene in the market segments, possibly increase the supply to the BDCs, increase supply intervention in the investor and exporters window, and also meet the demands of foreign portfolio investors whose funds are trapped in the country, and which has denied Nigeria the opportunity of receiving foreign direct portfolio investment. Last quarter, the capital importation report for fourth quarter showed that capital importation coming from portfolio investment only $35 million out of the 1.02 billion dollars that came in the fourth quarter. That is one of the least we've ever received in this country, because portfolio investments always about 60 to 70% of total capital importation in any quarter, any year. But for the last quarter of last year, it was one of the least we saw, principally because portfolio investors are trapped. Remember, their inflows are part of the available foreign currency liquidity in the country. So I believe with the increased crude price, the central bank will be in a position to clear the areas of portfolio investment that is currently trapped in the country, and that will open up the windows again for foreign portfolio investment. I expect that if current oil prices continue, we should see stability in the FX market, stability in exchange rates, and possibly with the right policy choices, we could actually see appreciation of the Naira to some extent.
Even at the Nigerian Stock Exchange, we see negative trading for some time now. Today, the market is still down 0.08%. What could you make of this, and what effect do you think basic happenings in the entire economy, in the outer economy, how do you see it affecting trading at the exchange? The other side of the market seems not to be attractive now when you talk of bonds and treasury bills.
Well, two things are driving the bearish storm we saw in the market in the past, last week and the part of this week. One is that the investors, we saw market gain 50% in 2020. We saw a market that also came early this year and started on a stellar run. But what that meant is that it created opportunity for people to lock in their capital gains. So we saw profit taking that took place last week and this week. The second factor is that we're also seeing an increase. We're seeing a trend in increasing yield on fixed income instruments.
All right, then we were supposed to get that point from Mr. Johnson Chukwu talking about how this affects the stock exchange. He was trying to make that point, but technology challenges as usual. Okay, let's see what the market is showing today. The market closed negative. The all-share index is down 0.08%. Top advancers, we have Julius Berger, we have Living Trust, Honeyflower, Cornerstone, UPD Credit, and top decliners, we have Vitafoam, Better Glass, Japan Gold, Fitzin, and Chi PLC. Mr. Johnson, are you still there? Oh, okay. I have Effiong up in the house now to look at these figures. Effiong, 0.08%. What is playing now? Mr. Johnson was talking about profit taking last week and this week and all of the effects this is having on entire trading.
So many things have come into affect stock trading. Not only profit taking, we have seen negative incidences in the economy that are not very good for investment purposes. You see, the exchange rate is a function that investors, analyze when they approach the stock market or want to do any other kind of business. So that's weak level of the Naira when you place against major foreign currencies, not only the dollars. We don't only do business with dollars. We exchange money into the euro, into British pound, Canadian dollar, and in every case, the Nigerian currency, is not at a reasonable exchange level with them. So you take volumes of our Naira to exchange for very little of the foreign currencies. So if you are a manufacturer, as an investor that you want profit at the end of your investment, you have to calculate how long will it take you to recoup, your investments and make profits after spending like this. Then the inflation now at 16%, you have to calculate it. We have security issue, which is important. And no investor, whether domestic or foreign, wants to place his money in an insecure environment. Because when you push in the money or you set up the factory, you recruited your staff and do all that, and then your production lines are, hold up somewhere. What are you going to do? Nobody will, take responsibility for that. So you have to calculate all of these things. They are risk. So when you have, we have so many variables, so many risks that are affecting, investments.
Hold on just for 1 minute. Let Mr. Johnson land on that risk. But Mr. Johnson, I hear we have you back now. So you were making a point. Mr. Johnson Chukwu. Okay, Mr. Johnson Chukwu, if you can hear me, you're live now.
Okay.
Yes, you are making a point.
Okay, go ahead, Tolu, I'm back.
Yes, you are making a point in regards to trading at the NSE.
Yes, what I was saying is that two factors are driving the bearish run we've seen in the market in the past last week and part of this week. And those factors are, one, people are taking profit because we've seen a market that has gained more than 50% between last year and now. And also when it started this year, it also started on the positive side. The second factor is that we are also witnessing an increasing yield of fixed income instruments. Only last week, the central bank auction of treasury bills had a 200 basis point increase from 2% for 364-day instruments to 4% for 364-day maturities. And we are seeing that trend on a consistent basis in the beginning of this year. So it possibly means that there's obviously a change in strategy by the central bank, and you could see an appreciable increase in yield on treasury bills, which is an alternative investment outlet to equity instruments. So discerning investors are beginning to hold back to watch if they should go into the fixed income space, hoping that the current trend of increasing yield of income instruments will be sustained. And therefore, people are no longer very aggressive in taking up equity instruments, particularly because equity instruments have already been priced off in the last 1 year.
All right, then, Mr. Johnson Chukwu, Chief Executive Officer, Carrier Assets Management Limited. Thank you very much for your time. I appreciate this.